Buyers flock to essential property. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Still working through my morning coffee. I thought we'd have a look at this article from commercialrealestate.com.au. This is one discussing buyers flocking to essential property. Buyers flock to 100% pandemic-proof properties at Burgess Rawson auction. Now, before we go through this, let's just jump over to the Property Council of Australia, their data room, and we'll bring up a graph that I like showing to people. This is offices, and we'll just look at if it's loading up properly. What is it? Property returns, office development pipeline, office demand, office vacancy. We'll look at this. You can see here. Now, this is the office vacancy rate. At the moment, it's at 8% for Australia. This is the whole... Well, I'll zoom up, roll up so you can see it. Okay, 8%. Now, if we have a look here to the left, between 91 and probably it peaked at 93, see that increase in vacancies from 5% to over 20%. Okay, let's just keep that in mind. We can see it here in Sydney. We can see it in Melbourne. In Brisbane, not as pronounced, but there was still nearly over a doubling. Adelaide, not as pronounced, but still from 10%. Ooh, Adelaide was at a pretty high vacancy rate anyway, 8%, 10% up. Perth, look at that, 10% to over 30%, and sitting pretty high at the moment too. Hobart, under 5 to over 15. And Darwin didn't exist in the 90s, everyone. Well, the data wasn't there. But then, Canberra. Let's have a look at Canberra. Look at that. Look at that. It was delayed. It was significantly delayed. They didn't get a hit until 97. Until 97. Sure, they went up, but they peaked at 5%. Well, what's in Canberra? It's the centre of the bureaucracy in Australia. It's our capital. It's the government. So, maybe this article saying the buyers are flocking to essential properties or pandemic-proof properties. Isn't that crazy? And what would they be? I mean, we can have a look here at the picture. This office was being sold for the first time in 25 years. This is Centrelink and Medicare, government social services. They're the tenants you want to get in there. They're the tenants you want to lock in there. An office in the New South Wales Hunter region that has been leased to Centrelink for the past 25 years has sold to a Sydney-based investor for $2 million and change. 25 years for Centrelink. If anything, there's going to be more demand for these Centrelink offices, everyone. The result was a highlight of Burgess Rawson's return to its in-room portfolio auctions in the wake of the pandemic, albeit with strict social distancing protocols in place, with 6 properties slated to go under the hammer. The Shell service station, Kucoin, sold for $3 million. So what are we having? We're having commercial offices where you've got government tenants secured. You've got petrol stations. The Centrelink property at Yakba Street, Nelson Bay, attracted 9 registered bidders and sold on a yield of 5.87%. It had been held by the vendor for 25 years, operating as a Centrelink for the entire time, and is leased until May 2022, with further options to 2025. Agent Kieran Burke said the popularity of the property with investors was recognition of desire for secure government-backed leases in the wake of widespread rent reductions during the pandemic. That's what this is kind of like buying a government-backed bond in some ways. 5% return. We had 133 inquiries and 32 contract requests during the campaign. This asset was a very good price point for a Centrelink, he said. Guaranteed Commonwealth Government income stream is highly prized in the current market, with few such opportunities being available to purchase in any given year, particularly at this price point. fellow listing agent Darren Behag said. The buyer is understood to already hold other government-leased assets. Mr. Burke estimates that inquiries for the essential assets Burgess Rawson had chosen to focus on during the pandemic included service stations, medical assets, and government offices had increased by 30 to 40%. 30 to 40%. What do you think, everyone? I mean, this aligns with some of the arguments with regards to residential around medical facilities. I know some people were saying doctors can afford to buy, which is true, but they've also got to move around a lot. You've got to move around a lot. You're not going to buy, if you're just starting your career out and you're doing residency at a hospital, you're going to buy a place or you're going to rent, particularly if it's out near Ipswich. I've got a mate, he's travelled around, he wants to settle back on the Gold Coast. So I can't imagine he'd be buying houses out in Whoop Whoop, particularly when rent's so competitive right now. They're 100% pandemic-proof listings, he said, adding that low bank deposit rates and a volatile share market meant people were confident bidding on such properties. 3 out of 6 properties slated for auction sold on the day, with a 4th selling prior. Other sales included a Shell service station in Kucoin, New South Wales. It sold for $3 million on a yield of 8.51%. The Cheesecake Shop in ACT suburb of Wanissa sold for $755 on a yield of 5.1%, while a Shell service station in Hutton Vale, Queensland sold for 6.8. Cheesecake Shop? Maybe. Is that an essential service? Let me know. So most properties sell in Melbourne. 15 properties were listed for sale as part of their Melbourne portfolio auction, held one day after Sydney's, with 13 selling under the hammer or prior to auction, translating into a clearance rate of 87%. Burgess Rawson Melbourne director Billy Halderhead said that total sales exceeded 46.8 million. Today was the first major commercial property auction event since the pandemic restrictions eased, he said. We're delighted with today's results. There was a genuine buzz in the room, and the pace of bidding was fast. A Hungry Jack's freehold in Cairns was one of the day's highlights, selling to a regional Victorian for 5.2 million, 200,000 above reserve. Now here's the thing. When a property 5 million sells for 200 grand above reserve, that doesn't seem as ludicrous as just a $700,000 house selling for 200,000 above reserve. Where do you think we're seeing the bubble, everyone? The result translated into a yield of 4.77%. These yields don't seem too bad. They seem quite reasonable. I guess Hungry Jack's, there's going to be demand for the takeaway. They didn't shut down, did they? They weren't forced to shut down. They still had the drive-through traffic. Other results included the sale of 3 childcare centres in Victoria's Werribee and Epping and Western Australia's Padbury for a combined 17.2 million. In addition, 3 fuel sites at 7-Eleven in Queensland Redbank Plains, a Viva in Langwarrin, Victoria, and a Caltex in Moma, New South Wales sold for a combined $13.5 million. So here we have it, everyone. Buyers flocking to these pandemic-proof businesses. High costs, millions of dollars. Reasonable returns in the given market, particularly compared to other places. What do you think? Would these be businesses that you would be looking at or owning the land that the premises are based on? We'll have to see. Particularly the childcare ones. But I guess, it's a government industry. It's a bit different renting out to them over the long term. I think the best one is the Centrelink for 25 years in the one office. 25 years. As always, thank you for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions down below. If you're a fan and want to support us, there are a few ways you can. Interacting with the channel, commenting, liking, sharing. It's a great way to help the content grow. You can support us financially via joining the channel on YouTube or Patreon, using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin, buying our merch from HeiseSays, using Gold Pass from the Perth Mint, or supporting us via PayPal. Thanks, everyone. I'll see you in the next episode.